going on, guys? It's Christian from Stock Hours. Today's video is pretty important when you're developing as a trader. It's about how to journal and why journaling is important in your growth as a trader. So some reasons why you should journal is because when you're developing, still learning how to trade, you're not going to know always right from wrong, and basically the things that are holding you back the most, and also the things that you're excelling in the most. So once you start journaling, you're going to be able to find your personal edge as a trader, and you're going to know the things that you should be staying away from the most. So I'm going to give you guys like a general outline of what you can do to journal. You just have to fit it to what works best for you, but regardless of your trading style, this video should be able to help you in basically becoming a better trader through journaling. So some of the reasons why journaling is important, like I told you, it helps you find and fix the biggest mistakes that are holding you back. So for me, when I first started trading, some of the big mistakes that I had, or some of the biggest mistakes that I had to fix, were losing trades for too long. So I would hold way past a reasonable stop loss. I would take 20-30% losses on red trades, and on the flip side, my green trades were very small. So I would take 5 to 7% on a green trade, which isn't bad, but considering that my stop losses were so big, my green trades would never make up for it. So I can be green all week and then have one big red day and give it all back, and even end the week red. So that was one of the biggest things I personally had to fix. There was also a bunch more, but that's just, for example, something that journaling helped me realize, is that when I flipped that to when I started cutting my losses quick and then holding my green trades longer, reasonably of course, but that was one of the things that once I fixed that, very quickly I started seeing profitability in my trading. Another reason why journaling is important is because it takes all of the emotion out of your trades, and it helps you see it in a very black and white sense. So when you're in a trade, especially as a new trader, you might be emotional in your execution, but when you're going back and reviewing the charts, and seeing how price action reacts, you're able to see it in a much clearer sense, in that you're not in the trade, so you're not making or losing money. It's just straight up black and white. This is where my stop loss should have been, this is where my profit target should have been, and then reflect on how you actually executed the trade. So now I'm going to share my screen. I'm going to show you guys a basic outline of what I do to journal my trades. So right here, I number my trades. So let's say I take 5 trades in a day. I'm gonna have to do this 5 different times. So in a good way, it helps me take less trades in a day, because I don't want to be here journaling for 30 minutes. But also, I've realized for me what works the best, or like where my best numbers are, is when I take either 0, 1, or 2 trades in a day. That's usually where I perform the best. When I start taking 4 or 5 trades in a day, usually the setups aren't as good as the days when I'm taking 1 or maybe 2 trades. So basically, going through this outline, all I do is pretty simple. This shouldn't really take you too long, because you want to do this every day. So if your journal is too long, too in depth, it can be a good thing, but it also can be bad in that you might not be motivated to journal one day. But if it's pretty quick and you can journal in 5 minutes, then there's really no reason not to do it. So mine it's pretty simple how I do it. So I just write down the stock ticker. So let's say I traded, and I'll also show you guys an example. So yeah, let's say I traded Tesla. I'll just write Tesla. Usually a grade, I'll save that one for the end, because all of these are what going to help you realize, whether this was a good setup, so maybe an A setup, or a B, C, whatever it is. Percent gain and loss, I do the percent and also the dollar amount. Both of those are going to be important in journaling, because the percent, that's, throughout every trade, you're going to be able to reflect on the percent. And then the dollar amount kind of shows you whether you were sized correctly, or you were sized up too much, or maybe not sized enough for the trade. So the next section is the setup. So just for example, maybe this is a bear flag into a low of daybreak. So you can write that. Maybe there was also a green to red at the bear flag. So basically whatever you have here, just write it down. If there's multiple, that's usually better. If there's only one setup, that could be fine, but if there's multiple things lining up, that's usually where the better trades come in, for me at least. Conviction, you can say, so this example, we're doing Tesla to the downside, low of daybreak with a bear flag. So you can say maybe Tesla has been weaker than NQ all day. You could say volume started increasing as the bear flag broke. Let's say you're in stock hours. You could even say that North signaled this trade, because that's going to be another reason why you took the trade or had a higher conviction in the trade, just knowing that North signaled the trade. And then what I did right and what I can improve on, those two are where I personally got the most growth as a trader. So things like I had a good stop loss could be in what I did right. So not too wide, not too tight, just knowing that before you got in the trade, you knew where your stop loss was going to be. That's very important. What I did right could be I didn't get in too early. I stayed patient for my level to hit, or my setup to come. There's a whole bunch of things in what I did right. It could even be that you were patient in letting your profit target hit. So that's another important one. But what I did right and what I can improve on is definitely where the most growth is going to be. What I can improve on could be things like, so in what I did right, I said maybe you were patient in letting your profit target hit, but maybe you weren't patient and you sold way too early. So you can say, in what I can improve on is that you should hold or be more patient when things are working out for you, so that you can catch the bigger move to your profit target. What I can improve on, you can say maybe you didn't have a stop loss set when you first got in the trade, and then you ended up stopping out. So what you can improve on is that before you hit buy, you right away know where you're going to stop out, because not every trade is going to work out in your favor, and when you hit buy, it might just reverse on you right away. So you need to know where your stop loss is going to be even before you get into your position. So this is just a basic outline of what I do. You can add to it, you can take away from it, but I feel like most of these things are going to be pretty important in your development as a trader. So now I'm going to show you guys an example of, or I guess one more thing that I would add. If you can add screenshots of the chart setup, and then also screenshot, so the 1 minute of how you executed, and then also, if you can, the bigger time frame to show you what the actual bigger setup was that told you that this key level is worth playing. Those are going to help you definitely in grading the trade, and also when you're reflecting, going through your journal, seeing the different setups that you've taken and how they've played out for you. So screenshots of the setup are definitely going to help. And then also, if you can record your trades, that'll definitely be beneficial. You'll be able to watch price action in real time. So what I do is because I record pretty much all of my trades, so when I'm rewatching the recording, I'll just do the journal on the side. So this way it's all during the same time, so it's pretty quick. But you have to make sure you have a good computer to record. You don't want your computer crashing on you when you're in the middle of a trade. So be a little cautious with that. But here's an example of, this is an older trade, so I don't really care. But this is an example of like a Tesla trade that I took a while ago. So you can see the way I did it. So save the grade for the N, the absolute N. Percent gain and loss, this was a good trade. I made 24%, but I only made $148. So I was definitely in pretty light. So that's the first kind of red flag I'm seeing from this. Setup, you see I have a bunch of different setups here, so that's good in, you know, higher conviction in your trade. So I have low of day scalp, volume gainer, meaning volume's picking up at my key level, price break, so is definitely like a key level. Like let's say, for example, this is the 200 break to the downside. It's a low of day scalp or whatever. Consolidation break, bear flag, these are kind of similar. And then green to red. So now for conviction, and you can see these last three are where I have the most written out, because that's where you're going to get the most information out of. So conviction, I wrote second test of pretty much the same setup. So okay, also this is the third trade I took on that day. I think the second trade I stopped out and then I got back in, so now this is the third trade. So second test of pretty much the same setup after a slight bounce gave me even more conviction that this low of day break was going to happen. After a big sell-off, we kept bouncing around the same level with lower highs on each bounce. Once volume kicked in and momentum starts picking up, I was confident that the low would get broken. Even if it results in just a wick, I will read the break on level 2, time and sales and futures, to see if we can continue to see more downside. So that was my thought process going into the trade. So I think I wrote that pretty well. So going back, I can pretty much understand the setup that was here. I can't really draw right now, but I would imagine it was something like this, like that. So like you have kind of like a pendant thing setting up, the flat bottom. That's just how I'm understanding it here. Whatever. But what I did right. So reading the green to red and volume picking up as the sellers were stepping in to push us to see more downside. I sized up here since probably got in, not really sized up. But since I noticed the sellers picking up steam and not letting buyers hold this up anymore. Also, I lowered my stop to now the high of the same candle. If we went back to green, means the reason I sized up is no longer true, which invalidates my trade. So actually, I think I probably got in, for example, let's say I got in with one contract and then I added a second one. That might have been the case on this. So once I saw more conviction, I added to my position. And when I added, I lowered my stop loss. So that's very good. I like to do that personally. Anytime I add, I like to lower my stop loss to manage my risk better. And then what I can improve on. I had really high conviction in this trade, but really low size. So that makes sense, because 24%, the fact that I only made $148, I was definitely in very light. Even after I added, on that, I was still in very light. So when you see a really good setup, you want to be going in with, the capital you allocate to a regular trade. You really don't want to be in light, just because your risk to reward gets a little bit messed up on something like that. So, having a consistent size is going to be your best bet, so that, let's say this green trade could have canceled out like 4 red trades if I had the regular size. But since I was sized down, it's really not anything too crazy, like padding your account in a way. But had really high conviction but low size. I did the right thing by limiting my risk, but these are the trades you have to turn your risk on. So that's basically what I just said, especially on a second test of the same setup, and is now proven to be way more true with clearer price action than the first test. So basically, like I said, I got stopped out probably the first test, and this second test is kind of where it worked out and had much more conviction. So this is just an example of how I journal. And then when you do this consistently throughout time, you're going to realize a lot of consistencies in your trading, whether it's good or bad. So for me, after 2-3 months of journaling, I would consistently see on red trades, I was holding way too long, and green trades, I was selling way too quick. So once I fixed that, my trading totally turned around. But then there was also other things. So like, you know, avoid chasing. When I stopped doing that, I would take less red trades. So even though my red trades were smaller, I would now take less. And another thing, sticking to like 2 trades or less has usually been my best. Those are my best numbers. When I take higher amount of trades, I start to take lower grade setups. So that's just me personally. So that's what I try to do. But I'm gonna go into kind of like how I would mark my chart. So like I said, when you do this, if you can attach screenshots of your charts, that'll be very helpful. Or even if you record your trades, that's also very helpful. But when you're marking your charts, this is a totally different trade, by the way, so just so you guys know. But whatever, when you mark your charts, you want to mark your entry and exit points. I use this website. You guys don't have to pay for a journal. It's definitely not necessary at all, because like I said, you can do this all for free on like a Google Doc or even a notebook. A lot of people like journaling on a notebook. They like the written thing. I personally, like, it doesn't really make a difference. I like having it on a computer because you can have them all in the same area. But really whatever works for you. So journaling is a big whatever works for you kind of thing. But when you're marking your chart, you want to mark your entries and exits. And then also your stop loss. So my stop loss, I think was, where was it? Oh, I think it was like the break of 223 on this play. When I got in, there was a huge wick, so that kind of scared me a little bit, which is why I sold my first contract very early, and that's one of the mistakes that I wrote. So you can see, sold too quickly, and also sizing. So even though I made 30%, I only made $226, which isn't really that good, considering I made such a high percent. And the setups, you can see high of day scout, multi-month breakout, earnings, basically earnings play, consolidation break, and morning breakout. So you want to write all those and then rate your trade. So you can use a website like this. It's really not necessary, but whatever works for you could be cool. Also, this has like an options chart, so when you're seeing your scale outs, you can see how options are moving at the time instead of just looking at the chart. Because when you trade options, obviously the way options move are going to be different than the way the stock moves. So on this $2 break, I caught 30% versus if you played shares, you would have made like 0.5% or whatever. But I think that's mostly everything I wanted to talk about. So I guess real quick, I'll go over some of the big rules. I kind of briefly talked about it, but so some of the big rules, no chasing. So I personally don't do well chasing setups. I like it when it bounces or consolidates before my entry. Cut losses quick, try to let winners run. I talked about that. 0, 1, or 2 trades is enough to walk away. More than that, my numbers start to struggle because setups usually aren't as high quality. So like this grade might be like C. You could get a lot of C grade setups in a day, but the question is that worth risking your capital? And to me, a lot of times the answer is no. I'd rather be cash 3 days than take 3 days worth of C or D grade setups. So for example, today I didn't take any trades, nor signal 2 green trades, or even 3, but I already closed my computer by the time he signaled the 3rd one, and the first 2 just for me didn't fit my trade criteria. So the first one, I wanted to bounce, it didn't really bounce enough, and it kind of just broke. And then the second one, it was just a level I wasn't interested in playing, so I skipped it. Another rule is step away before 11. 11 is even pretty like as of recently, 11's been pretty long. Um, Usually I'm gone within the first 30 minutes personally because I trade breakouts. So volume is going to be the best right off open, first 30 minutes, first hour maybe. If I'm here past 11, there's a lot of times I might be red and I'm trying to like revenge trade, so like get my losses back, and that's always a bad thing. Or I'm just bored looking to force a setup. Because, you know, when you sit here for a long time, this is me at least. My brain tries to look for setups versus let the setups come to me. So, plus volume starts dying down at 11. So, usually stepping away before 11 or at 11 has treated me well. So, I'll, you know, keep sticking to that. And another rule is stick to a pre-market plan, or if there's an intraday setup, you have to plan it out before you get in. So meaning plan your stop loss and plan your profit target. And if you don't have time to plan out your trade, don't take the trade at all. It's not wise of you to take a trade with no plan, you know, no plan stop loss, no plan profit target. There's really nothing good I can say about getting in a trade, having no idea what you want out of the trade and where you're gonna cut it if it goes against you. But I'll leave it at that. You know, this is my outline if you guys want to copy that. But journaling, you should journal every day and every trade you take. That's my recommendation. It just helps your numbers and it helps your growth as a trader. When I wasn't journaling, I was losing money consistently all the time. When I started journaling, I started noticing things that I should do and things I shouldn't do. So basically everything I said in the rules, and it helps give you a it's like a principle rule book for the way you should trade. So it gives you something to work off of versus kind of just going at it and seeing how trading treats you, because you could get lucky a couple times, but if you don't have rules and principles, over time your account is probably gonna start trending down versus trending up, how you would like to see as a trader. But that's it for me. Let me know if you guys have any questions in the comment section down below. Make sure you like the video and subscribe. Peace.